There's a couple of things I wanted to discuss. First, we have an abbreviated holiday week. So I'm doing this on Thursday as opposed to Wednesday. You could always assume if we have Monday off that unless there's some kind of wild market situation that we're involved in, I'll be doing my stuff on Thursdays. So we had a ADP jobs number this morning that took the probability of a rate hike coming in. How many days is it until the next meeting? 12 days, 21 hours, 37 minutes, and 4 seconds, to be exact, to 92%. So the Fed is likely going to be hiking interest rates at their next meeting. I think the question is going to be is if they hike in the next few meetings. All these Fed governors want to talk tough. It seems to be like this virtuous circle of rate hike talk. My opinion of that is that they're being a little disingenuous with how they're expressing what they want to say. I think what they really should be saying is that the economy is slow, the risk is probably to the upside, but we're not needing emergency policy anymore. They keep with this dance of, will the inflation pick up and will the growth pick up, and talking about how great the jobs are. Everyone knows the jobs suck. There aren't good jobs. That's expressed by their average hourly wages and average hours worked, which are still far below a regular work week. So I think the Fed would behoove themselves in their credibility to stop with the BS and just come out and say we don't need emergency policy and we're going to raise rates a little bit. It's not going to go all the way up, but just a little bit. That's really what they should be saying, and that's really what is happening. So as far as like this cycle of rate hikes, I think it's still dubious at best given the slow growth in the fourth quarter, but you've now had 3 back-to-back Philly Fed barn burners, and that is, frankly, the economy is plugging along. Things are not doing terribly. Today we had a very positive event take place. I know that a lot of you will disagree, but President Trump took us out of the Paris Climate Accord, which is fantastic for growth. This should be a net positive for the, the states and constituency that have been ailing so badly in the country, and I would say it's a net positive for growth and for jobs. So we'll see how that shakes out. He did talk about some type of renegotiation. I know there's going to be a ton of media blowback on this, with all the global elitists who aren't the ones being put out of jobs in these, parts of the country that have been just hammered under the last 8 years of the past administration. So that, I think, is a net positive. As far as, I'm just looking at some of the stuff you guys and gals want to talk about. Some of it is interesting. Some of it is a little less interesting. But let's first and foremost talk about, maybe we'll talk about the market keys first. With regard to the VIX, this thing has just been getting totally poleaxed. I think the reason for that is that people are seeing what I'm seeing with regard to growth, and they're not in fear of a recession. And every time there's a bit of a market pullback, like we had a pretty big dip the other day when there was this talk of the Comey incident. He's, by the way, testifying in a week from now, the 8th. So that should be an interesting event to potentially have trade opportunities into. The VIX is just kind of, and I mentioned this in the weekend review video, I said I thought we would maybe have a couple of little sputters up, but it would probably be bouncing around the bottom. Usually when you have these holiday shortened weeks, they usually tend to be bullish. And I know a lot of people take extended vacations, so there's probably not a ton of people around even trading at this point. It's sort of like get to the beach season, go out to the Hampton season. We'll have, again, I just like to go by, keep it simple, and I go by a lot of the levels. So I see that VIX is probably just going to bounce around here for a little while. I don't really see a problem with volatility until you get a sustained move over 200 of multiple days and then take out the downtrend line. If you haven't seen my weekend review video, check that out. You'll see exactly what I'm talking about. The dollar is into a point where I said I thought it would bounce, although the bounce has been kind of lackluster. There's a range here that I sort of have drawn in here with the range low. I'm talking Dixie terms here. If you look at, hello, someone just came in and said hello, I'm saying hello back, 96.82. Below there to me would be a right or right out short. If you can get back up above this like 97.82, 85.2, that to me would be a right or right out long. But the dollar is almost looking like it's going to have maybe a little bounce. But frankly, I mean, this thing looks like it could take another leg lower. I've been in the camp, though, that I think the dollar would have a bounce. I would be either interested in shorting a breakdown or some type of a rally back to, like, let's say the 50 MA. The bonds are kind of acting like they're calling bullshit on the Fed, frankly. They're above the 2009 crash peak, which is, of course, 123.15. It isn't above the 200 MA yet. I've been expecting a 200 MA test. There's a lot to prove here. You have to clear a 200 MA. There's a 127s, which is the start of the gap, and then the gap fill at 130. There could be a bias up. I'd probably be buying dips down to at the 50 MA if there's some type of a pullback for right or right out trade. But you know, everyone has sort of understood that the Fed is going to raise interest rates, but interest rates are going lower. So maybe the Fed isn't going to be, maybe they're going to give a very dovish statement. That to me could be the catalyst maybe to fill in that gap for the bonds. This is sort of, we're at the recent range high here. So we got to clear the 200 MA. If you could get a sustained move above the 200, then I think that the bonds could potentially have a bit of a rally. Everyone keeps getting nervous about every pullback in the market, but HYG isn't acting as if we're going to have a recession. It's just hanging out, drinking stout all the way at the range highs, making higher highs off higher lows. So until you start seeing that pattern change, let's not really get too worried about recession. Again, there could always be a market pullback, but it doesn't always have to be, 2009 all over again, 2008, 2009. Oil. So keep an eye on this oil. Today had a bigger drawdown than expected. It wound up not closing so well. It was sort of some very end-of-day weakness. My view with this is that if you can clear the 200 MA in oil and sustain, it will go higher. Anything below there to me will remain a little iffy. Potentially for a retest of that like 45s, maybe 44s. I know a lot of people are very bearish on oil all of a sudden, but that to me strikes as a potential for there to be an upside surprise. So keep an eye on that. I've been getting a lot of questions and talk about the stocks that make up the oil ones. The XLE is acting very poorly, although today wasn't so awful. You've had a couple of bounces. The 64.19 is the 50% fib I have drawn into the move. You're coming into some reference levels. I think the kind of like the downside potential here is maybe to like 63.5. I'd be an interested right or right out long there for probably out of the money put sales, because that's sort of the bottom of the consolidation before the rally. Those aforementioned out of the money puts would probably be around 61 strike. That's the gap fill on the 61.8 of the entire bigger range. Or I'd get bullish again on a momentum move with a break back up above and hold, sustained move above the 50 MA. So that's my take on the XLE. China acting well. That is the FXI is coming up. The real breakdown took place around 40.64. So any further moves up, you'd probably want to. Someone just sent me sent a message. I didn't see what it said. If you, by the way, if you have messages you want to send me, I can't get to them all during the broadcast. Send me them on Twitter at Justin Pulitzer. Anybody could DM me if I follow you or not, and I will do my best to get back to you in a timely fashion. Yeah, I think China is looking good, but I'd probably not be. Although, frankly, this thing looks pretty good. I mean, you had a gap and hold. This is an ADR, so of course it always trades in gaps. But China is looking better. I wouldn't really start getting too bearish on that until you start putting in lower highs and lower lows on a separate leg down. The China stocks that we all talk about, like Baidu and Baba, Baidu is acting a little weird. I would have thought this would have been stronger by now. It had gotten back up above that 188.54. Now it's kind of back below. It's a choppy mess, but I mean, this frankly looks like it wants to resolve higher, but it's just acting a little bit funny. I think the better way to play this would be the Chicken Little way with maybe some short puts. Baba got my 1.618 fib extension. The back off has been really mild. That was at 124.62. There is some room to the channel high. I would be a buyer on this at any pullbacks down to like the 50 MA. The 20 MA has been key, so if you're long and you're looking for a stop, you're already long. The 20 MA and the gap fill are roughly equal, so I think you could use that as like your stop. The biotechs. So we did exactly what I said I thought we were going to do in the weekend video, right? We got to the channel low, the 200 MA, and now we're bouncing up back to the 50 MA, which is where we would be looking now to take some profits. And it's right at the downtrend line. So let's keep it simple. I need to see this thing now sustain above a 50 MA for a new long. I mean, the trade is pretty much my trade of the buying the channel low and the 200 MA is now the point to be booking profits. I'm a trader. I don't really think long term like this. Once in a while I do, like my epic call at Facebook when I turn bullish at hating the IPO at 38, turning bullish at $20, having it go $1 in my face down to 19, being called a dummy, and then told everyone it would go to $100, and we all know how that worked out. So that's, I don't really think long term with these things. I think trading sessions. So unless I specify otherwise. So once in a while I will say I'm thinking long term, but if not, always assume I'm thinking for a quick trade, because I can't put up a trade here and say I'll talk to you in 2 years from now, or let's talk again in 6 months. You guys, I mean, if I'm not right for every 5-minute candle of every day of the every day of the week, I'm an idiot, right? I mean, I might as well put on a clown nose. If let's say let's say I make a call on a stock and it's like not up that immediate session, I have like my inbox fill up with like with tons of questions. What's going on? Blah blah blah. So that's why I don't really talk about long-term stuff. I keep it. I try to keep it pithy, and I try to keep it short, concise. Pithy and concise, concise and pithy. That might be my new creed, my new credo. Let's get serious here for a minute. We're in the danger here of negating the Head and Shoulders top of the transports. This is very, 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 very critical for the bulls to pull this off. I have a concern, though, that we're coming up from the bottom basically to a range high, but we're kind of negating it. Let's see, what was the high here? The high was 167.77, and today's high was 167.66, so it's pretty close. This is a big deal. We held the 200 MA. It was almost like a false breakdown, look below and fail. I'll tell you, if you could start sustaining, we're now above the 100 MA for the first time in a while, actually. We haven't been above the 100 MA sustainably really since the kind of like the toppy breakdown of 426. If this can now take out and hold this right shoulder, you can see another leg higher in the market, but this must hold. If you're right or right out here, it's the 100 MA or it's nothing. I've been noticing I like this JetBlue. I fly JetBlue once in a while, though I haven't in a while. It's acting well. The back off has been rather mild. If this can clear 23s, it probably sees 25.44, which would be the gap fill. I think that's where it wants to eventually go. So I'm a buyer on dips in JetBlue. I don't like to chase, but I like to buy dips. Let's talk about other recessionary indicators. One would be copper, which is basically just in a big bull flag here. So, and we're actually breaking the downtrend here again. We're stalled right around the 50 MA. If this can clear like the 50 and 100 MA, I would start feeling very comfortable maybe getting back into some of these wild and woolly commodity stocks, but we'll cover that in a minute. XLF. Sorry, I needed a sip of water. Stalled, of course, today right on the 50 MA. That is the beginnings of repair. Today, again, this was the first day of a new month. It's really weird what's going on. I used to make more of the quarterly beginnings and endings than I am, but now the monthlies seem to be a big deal. We have all this weakness on like the last day of the month, and then you get strength on the first day of the month. So I want to see this sustain a move. We're starting to make some higher lows. We need to start seeing some higher highs. And if this needs to negate that right shoulder, I've seen so many technicians talk about the head and shoulders. I was early on this, by the way, too. I talked about the head and shoulders before it even formed. That I was seeing I was sort of seeing the beginnings of a head and shoulders, and it's formed here. So 2285 is kind of like the range low and the maximum amount that you'd want to let it kind of move. The 200 MA is caught up a lot. I think the problem for these financials, and I'm going to be really frank, and maybe I'm going to pull a Senator Geary here and speak to you a little bit more frankly than you're used to being spoken to. And I'd appreciate if you put up the fee for the gaming license personally, Senator. You need to see deregulation. Everyone is all caught up in rate hikes and this and that. This is not where the banks are making money. If you go back into like deep JP videos, and I often do refer to myself in the third person lately, you will see me talk about being interested in insurance companies to play the rate hike cycle, because the regulations that have come into banks have crippled their businesses. They are basically walking utilities. They pay dividends and they do all kinds of stuff, but they're not really growth companies. If they can have deregulation, getting rid of the Durbin Amendment, getting rid of Dodd-Frank, getting rid of all of this, frankly, bullshit that was layered onto these companies to punish them for the financial crisis. By the way, nothing in any of the financial regulation to date has done anything to stop what caused the 2008 and 2009 financial crisis, which really began in 2005. Most people don't know that, but this all really started in 2005. That's when real estate prices took a downturn, and it took till about 2007 for it to fully metastasize and not be hidden in balance sheet, and off balance sheet, trickery. Amazing, right? You could have the exact same crisis unfold all over again. I don't want to get into like the mezzanine debt and all this structured stuff, but it's absolutely incredible. Yes, Ruth says exactly, you can't legislate morality. They do all kinds of other things, like you saw the, frankly, a really pissant type of a thing to do with the opening the accounts they did in that Wells Fargo. But these companies have been squeezed so badly that they need to do shit like this. Sorry, I'm trying to keep it a little bit cleaner. I'm just excited about the climate thing, so bear with me. 50 MA, let's get above the 50 MA, let's see that shoulder negated, and then after that we'll start talking financials again. And when I talk about financials, we'll run in, the Citibanks, the Bank of Americas, the JP Morgans. It'll be like trying to decipher raindrops on on the neighboring roof in a rainstorm. They'll all go up. If you can negate this this right shoulder. But until then, I'm still a little cautious, and at the very least, need to see a 50 MA break and sustain. Let me just look at JPM for a moment. Oddly, I'd like to discuss something. JPM is weaker than XLF, which is sort of like ExxonMobil being weaker than oil. It's usually a tell. You now have a channel snap. Where did it close? Hold on. The close today. Wow, this just, let me tell you, this closed, and I'm going to give you guys a great right or right out trade in a second. This thing closed literally 3 cents above the breakdown point, 83.03, and you have tweezer bottoms. So here's a fun trade. You have a 2-day range that yesterday was technically the breakdown, and today was sort of the pause. I would like either right or right out short below the 2-day low, or right or right out long above the 2-day high. If you clear that high and negate what could be a false breakdown, I think you'd see a 50 MA day trade very, very quickly. But I am a little cautious on the fin still, given the relative weakness in JPM. You need to see that ship righted first. All right, let's get back to the stocks you all want to talk about. Again, a lot of weakness in this U.S. steel. I had sold some puts down by the 61.8. I'm still in them, but I'll use the 10-day MA as my stop. It's starting to bend up, which I like, and we're right on the 20. So 10 MA is key. If you can keep the 10 MA, that to me would be okay. I just want to see something quickly. Yeah, I didn't think so. All right, so that's that. Someone asked about Goldman Sachs. I think I answered that. That had a 200 MA hold. I'll look below. These are all tough. They all look the same, the charts. Again, Goldman looks weaker to my eye than the overall XLF. You did fill a gap. You have a trend line lower. If you want to play this long, I think you want to really see this thing. Boy, this is a really choppy mess. I would need to see this thing break a trend. At this point, I'd need to see a trend line break. I'm not loving the way this thing looks. 200 MA here as a whole. If you want to play it long, stop below today's low. I don't know how much lower you'd go because you do have 207s, which is basically a trend touch. But given the fact that JPM broke it, and the 61.8 basically of this negates the entire move down at 182s. If there's a move, by the way, down to completely negate this entire thing, I will be selling puts like there's no tomorrow. So I'm cautious on this Goldman. One I do like, and someone asked me about it again, and I mentioned this in the weekend review video. I hope you guys and gals are watching this because these are gems. These are gems I'm giving you. I'm giving them to you for free, for at least for a little longer. Blackstone, BX, new high for the move today. Very nice. We stalled a little bit today on the 50% fib. I was hoping, I'm still hoping, to see this thing up to the 61.8 at 35.98, but I would probably use a little more strength to start booking some gains, just trimming a little bit, because this is, by the way, a textbook professional gap, and I had called it at the time when it happened. And you can take a little crayon or whatever, you can take a trend line, and you could go from the gap low of 522 connected to yesterday's low and use that as a trend line. A break of that, you stop out. Other than that, you just keep trailing up the stops and look for another push higher, maybe close to the high 34s, 35, to start booking a little bit of profitos. But I do like the Blackstone. I think they're going to benefit from some regulation that's coming out by the Donald. Talked about XLF. One thing that took a while to participate today was IWM, the small caps. I got an alert today. Today was a trend break on a powerful move off of higher low on the leg. And you are above the 138.17, which is good. If you can hold above that level, I think higher. Back below it to me would be a little bit more iffy. It's a bit of a proprietary level I have drawn in. If anyone's really interested in that, I'll explain how I came up with it in the weekend video. But I assure you that's a good one to use. As long as this really holds the 50, 100 MA now, if you want to play, how's this for a little option trade? If you want to be quick and you're bullish, I think you could sell out of the money puts that are roughly at that 50, 100 MA confluence. I don't think you're going to lose that this week or maybe next. I don't know, but I think it could work. You could probably put it on. If you get in trouble, it's easy to roll. Either turn it into a, you could roll it down, you could collar it off, or you could even make it into some kind of a straddle. A strangle. I wouldn't do a straddle. I would do some kind of strangle. Although, you know what? Maybe with this low IV, a straddle could be interesting. But anyway, I don't want to get into that. We're getting ahead of our skis here. But yeah, if it starts breaking there, I would turn it into like a bit of a strangle. So that was IWM. Let's take a look at the Qs. They were a little weak today. There was a little bit of sector rotation, although they did make a new high today. But if you looked at some of the big boys, I was noticing this morning that FANG was a little weak. Apple, of course, has had a little bit of gains. I think that's just allocation because it's in all of the major indices. So I'm not reading too much into that, like that little bit of relative strength, although this looks a little iffy to me. I think Apple wants to see higher, the 162.39, but I don't know that it's not going to pull back a little bit first. If you're really worried, you could use 151.12. I wouldn't like to see it much below there. And if you're really on the money, you could use today's low as a stop. I'd be fine with that. Above the 2-day high, though, I might actually even add long. That to me would be interesting. That would be on a breach of 154.17. Let's talk about the other FANG names. Facebook has been looking a little bit bullish. It sort of has a mini double top going on here, but it's not really acting double topish yet. I mean, it technically just happened yesterday. If you've been in this and you have big profits, you could use that 10 MA as a good stop. If you lose that, maybe it sees the 50. I think this thing is just going to chop around for a while, though. That's my take on Facebook. Oops, I hit my little thingy here. Amazon. And we're already getting late. I want to get out of here soon. Amazon today had a little bit of relative weakness. Yesterday was a cattail, a hammer low. I think you could use yesterday's range as a gauge if you want to play right or right out. I think if you get above the 2-day highs, you can play long, and I think you just have a lot of people who are afraid to pay $1,000 a share for Amazon. And this thing has rallied a lot. And I still think you have people who want to say they sold Amazon at 1,000. And the longer it kind of just chops here, it just needs to work off some of that excess. So I like playing against yesterday's range long or short for a right or right out play. I don't talk about this AAOI that often. You got my target. Remember we talked, last time I was on record about this, I said 72.49, which is the 61.8. It's not backing off a ton. So if you're long this, I think you could use 67.12 as your stop. That was the big kind of the bar that hit that. It's the big body candle. If you break over 72.95, then I think it's going to go to $80. So those are the levels that I'm watching. And if you lost that low, I think you could try row short for a move back to 60, maybe retest the breakout. Disney. Not really a huge fan of this pattern. It's making lower lows and lower highs, so, and it's below the 50 MA, which is now downward sloping, and the 100 MA is starting to roll over. It needs to get over the 100 MA. That 50 MA, 100 MA confluence would, to me, be very critical. If this were to come down somehow, like if there's some kind of like June swoon or whatever the hell these schmucks on TV call it, down to like 94s to 97s, I would probably be an out of the money put seller for a bounce. So that's the scoop on the Diz. Skechers. I'm actually long a little Skechers via short puts, and I haven't really been paying that much attention to it, although I'm seeing something interesting in the chart. It held what I would consider a regression line. There's no way anyone else but me would see this because that's just how I roll. I'm not even... I'll show you how to do it in the weekend video. Let me circle this. This is an important skill I think that you'll find interesting. If you want to follow at home, you could draw a line from the 12.8 high to the 125 high and just extend it to the right. You'll see that that has held it on moves lower. However, I don't love that it's making lower, it's been making lower lows, but now we filled the gap and now we're back up above the 50 and 100 MA. I think you could be long this via short puts as long as it holds the 200 MA. So long story short, that's Skechers. Another one that's been up after hours big was this Lulu. Someone had asked me about it, and I said 40.45 was a ton of support. They were asking about selling puts, and I gave it a tentative thumbs up. It turned out to be smart because this was down. I didn't love that it rallied so much into the like yesterday and today, but it didn't really rally. The last earnings it really rallied, and that's why it got the wackaroo. Where are we now with Lulu after hours? I think it's up, right? Yep, it is up. 55.50. So that's getting into the top end of the range here and out of the gap. I wouldn't be surprised to see Lulu pull back. If it does, the 50 MA is a row long. If you want to also, if you don't think it's going to come back, here's the trick. Watch it early tomorrow. This is going to be a little bit of a real trade school, not that nonsense they talk about on TV. What you want to see is if this now, the after hours high is 56.25, so you need to see it eclipse that and hold above it in regular trading hours for more. If there was some kind of rollback early, and I wouldn't be surprised if there was, I do think that this could set up like a Deckers where there's a ton of shorts. Let me see what the short interest was in real time for you. I just used shortsqueeze.com. This was Lululemon. I bet you it's a high short interest. Actually, it's not. It's only a 7% percentage of the float. I was going to say I thought this would be in the low teens, given the move it's had. Interesting. If there's a pullback to the 50 MA, I'd be a put seller. I think that would hold it. Yeah, the 50 is the must hold, in my view. So you need to see. So this is what I would do. I'd wait to see it clear that either over that after hours high, or I would buy it on the dip down to the 50 MA. So that's the key with that. Deckers. Why did I like Deckers? I had said that I would wait till the earnings to either be long, or I was looking to be long, but I either wanted to buy it higher or lower. And one of the things that I liked about Deckers, so what I liked and what I didn't like. What I didn't like was that we lost the 50 MA. It did hold the 100 MA, and it held the backside of the downtrend line. The old downtrend line. It was sort of like almost like a check back. Let me put that into my to discuss in the weekend video. And then I had said after hours, if this could, as long as it holds above the 62s, there will be continuation, and it has. And now you're at a new high. I will caution this: you came up a lot already from the bottom. I'd be looking at. I know it broke out, but I'm dubious that the breakout is going to hold without some form of sideways action or pullback, considering how far it's moved already, and now that you're in the 1, 2, 3, 4th day. So if there's like, let's say, a gap up tomorrow, I'd probably be booking some profits. This Under Armour is just acting like poo down here. I don't know how much more downside this thing has in it, although that's famous last words. Trend is really closer to 15 at this point. It needs to clear the 50 MA. If it can sustain over the 50 MA, I think you'll get a rally. If it can, it's just going to kind of chop and languish. This Restoration Hardware, I'm getting some alerts on that this thing blew up after hours, right? Look, this thing was up huge from $24 up to $60. I mean, I don't know what more you were waiting for. I had been bullish on the lows on RH. I held it a long time and I got out a little too early, but that's okay. That's okay. Hold on, I'm just drawing in a Fibonacci level because I'm curious to see where this may go. 24.41, and it was 60.11 was the high. The gap fill is right at the 61.8, down at 37.98. Where is it now? PQRRH. It's down at 44. The 50% fib and the old range high are close at 42.17 and 41.10. I wouldn't be surprised to see this thing leak a little lower. I'd be a buyer, though, down at the 61.8. I think that was where the gap was. This might not fill. I've seen this happen before where you get these sort of like moves to like the start of the gap, and then they kind of rally up. So keep an eye on the after hours low. This is going to be kind of the reverse of Lululemon. You need to see this thing. It has a hammer low. I'd really love this thing to just to open up even lower, like right down at that 61.8. I'd probably either buy shares or sell puts, but this thing needs to show you RTH. This is how I would trade it in the morning. If you're playing for a breakdown or a bounce, what you want to see is the RTH low. This is for the bounce play. The RTH low, regular trading hours, be higher than the after hours low, and then take out the first 15-minute high. If you want to play it short, you want to see the opening, or you want to see the RTH low, the regular trading hours low, eclipse the after hours low, and keep going, and then you could set your stop above the opening 15-minute high. This is just how to trade. I'm sorry if I'm being repetitive to people, but I know I have different skill level people following, so I hope I'm not putting everyone to sleep. We covered the Lulu, we covered the RH, and we're about almost 40 minutes in, so let's call it quits for the moment. I hope this was as illuminating for you guys and gals as it was for me. I always love doing these videos. If you missed it or you came in late, it will be on my YouTube channel shortly, and I will see you on Sunday for the weekend review video. I hope everyone has a great rest of your week. If you have questions that I didn't get to, just message me on Twitter. If you're not following me on Twitter, I don't know what you're doing. I mean, geez. At Justin Pulitzer. Send me a DM. I am very happy to answer. If it's something that you think would be, if you're not shy, you could put it on the stream and I'll answer it there. I usually love doing that as much as possible so that other people who have the same questions can answer it. Anyhow, that is my video here, and we'll pick it up on Sunday and probably on the stream tomorrow anyway.